Well, the US national debt just surpassed $25 trillion, so I think we can all agree it's time for our leaders to get the spending under control, kind of get more responsible about it, and not leave it for future generations to, oh, what the Welcome to DeFi Now. I'm Josh Cross, and with me, as always, my trusty sidekick, Steve Irwin. I see you taking notes, Irwin. Good job, buddy. In this video, I'm going to teach you about the most important event in Bitcoin, the halving. Now, the halving event happens every 4 years in Bitcoin, and it's a big part of what gives Bitcoin value. And it's happening tomorrow. Make sure you watch this video all the way to the end, and you'll understand why everybody is losing their minds over this. The halving, or halvenings as it's also known, is an event that takes place every 210,000 blocks on the Bitcoin blockchain. This event is responsible for the fixed issuance of Bitcoin, which will never exceed 21 million Bitcoins, as well as the decreasing issuance of Bitcoin. Did you get that, Irwin? All right, let me explain. New Bitcoins are issued to the miners in every block in the blockchain. This is their reward for the mining that they do and for validating transactions. When the Bitcoin network first went live, there were 50 Bitcoins issued per block to the miner who mined that block. At that time, the price of one Bitcoin was technically zero because there was no way to trade it. It wasn't really available online like it is today. It wasn't available online to trade until 2010 when the price topped out at a whopping 39 cents for one Bitcoin. In 2012, we had the first halving event when the block reward went from 50 Bitcoin per block down to 25 Bitcoin per block. During that time, the price for one Bitcoin was $12.35. In 2016, we had the second halving when the block reward went from 25 Bitcoin per block down to 12.5 Bitcoin per block. At that time, the price was just over $650 for one Bitcoin. Now tomorrow, we're going to have our third halving event, and right now the price is trading right around $10,000. This is the phenomenon that drives the inflation rate down while driving the price up. As you can see, with each halving, we've had more than one order of magnitude increase in price. So while we have quantitative easing in traditional markets, which is just a fancy word for money printing to keep people uninterested or confused about what's actually happening in the economy, in Bitcoin we have quantitative tightening, and this is why the timing is so important right now. After this third halving, the annual inflation rate for Bitcoin will be at 1.8%, making it more scarce than gold. Did you get that, Irwin? He's just eating. Regardless of how much you know about economics, you probably do understand the concept of supply and demand. So if you have more supply or you have less demand, the price is going to go down. And if you have less supply or more demand, the price will go up. There are many reasons why Bitcoin has value and why the price has gone from being virtually worthless in the beginning to now trading around $10,000 for one Bitcoin. And the reason for this is we're having an exponential increase in the interest and demand for Bitcoin, while also having an exponential decrease in the supply of Bitcoin due to the halvings. As I said, in the beginning, the Bitcoin blocks contained 50 Bitcoin per block as a reward to the miners. This equates to one Bitcoin being created every 12 seconds. After this third halving, it's going to take over 1.5 minutes to create one Bitcoin. By the year 2030, it's going to take 6.5 minutes to mine a single Bitcoin. At that time, 21 years after the Bitcoin network first went live, over 98% of all Bitcoins that will ever be created have already been created and are in circulation. It will take 100 years to mine that last 2%. Skip ahead to the year 2112, and it's going to take 25 years to mine a single Bitcoin. This is what digital scarcity means, and this is why Bitcoin is referred to as digital gold. After each halving, the revenue stream for miners gets cut in half. Now, do you know of any businesses that could handle their revenue being cut by 50% and still staying in business? While many miners will go out of business, most miners are already planning for this, so a lot of them are operating at a loss, expecting that the price for Bitcoin will go up to make up for it. So if their mining reward gets cut in half, the price needs to double to make up for that, which it has done in the past. In fact, it's much more than doubled in the past. This is also important because miners represent the largest sell pressure in Bitcoin. There's nobody selling more than what miners sell because they're making their revenue in Bitcoin and they need to pay their bills in US dollars or in whatever currency based on where they're located. So if the block reward gets cut in half, the miner's revenue gets cut in half, then all of a sudden that sell pressure gets cut in half. So there is half as much pressure to sell Bitcoin while having the same amount of people or even more people wanting to buy Bitcoin. And this is why we've seen such sharp increases in the price. Bitcoin doesn't need a government bailout to make it through this economic downturn. Bitcoin also doesn't need leaders to determine its monetary supply. The monetary supply of Bitcoin is embedded in code and is now being shared by thousands of market participants all over the world. So then the free market, and not governments, will determine how it is valued. Erwin, I see you actually wrote something down there. Can I see it? No, come on. Come on. Come on. Just let me. You wrote this? While I admire your handwriting and the paw print, that's a nice touch, you can't go around giving people financial advice. Speaking of which, I am not a financial advisor. I'm just a somewhat obsessive researcher into this technology, and I'm sharing what I've learned because I think it's extremely valuable and worth sharing. You should always decide for yourself what you're comfortable investing in, you should never invest more than you can afford to lose, and you should always do your own research. If you'd like to learn more about how all this works, you can read about it in my free blockchain guide in the description. And while you're down there, go ahead and click the like, the subscribe, the bell, all that good stuff, so that you don't miss out when I upload new videos. If you're looking to buy some Bitcoin, I recommend the link to Coinbase in the description. Coinbase's UI is simple, it's intuitive, and if you use the link in the description, then you and I will both get $10, so definitely check that out. Today I discussed one of the major strengths of Bitcoin and why it has so much value. Next week we're going to discuss what it would take to bring the Bitcoin network down. So stay tuned for that. Thanks for watching, and I'll see you again next Sunday.